Bernanke's been given his Humphrey Hawkins testimony the last couple of days, and there's some doubt over QE3 now.
There is. I think more because the economy looks like it's gotten on firmer footing. We've gotten a string of pretty good jobs numbers. Today, unemployment claims came in again. They came in at a pretty reasonably low level.
They were like 350 or something.
They're around 350, and they've stuck there, which is important. So, I think the thing that people are calculating is if the unemployment rate keeps falling, and Bernanke acknowledged that it's fallen more than he expected. That was actually one piece of news that I thought was pretty striking from his comments. If it keeps falling, then they might not be back in the market.
And the fact that he noted that was enough for the markets to kind of freak, or at least to react immediately. Right. The fact that he was noting that, you know what, inflation is moderate, stable as we expected, but you might see a temporary bump in inflation.
Right.
And by the way, unemployment, jobs have come back better than I expected.
But it's important what he said after he noted that unemployment has fallen, which is that he's not so sure that those declines in the unemployment rate are sustainable because, based on the Fed's models, the kind of growth we're getting shouldn't produce the kind of declines in unemployment that we've got that we're getting. So there's a bit of a conundrum right there. And he seems to be coming down on the side that, maybe we're not going to be able to keep this up. So don't get me wrong. I mean, QE3 is still very much on the table and in the internal discussion at the Fed, but they've got a meeting coming up in a week and a half, or 2 weeks, I should say. I mean, it doesn't look like he's racing to let it out at the next meeting. I mean, who knows what happens in April or June?
There is the problem, and I think even Bernanke would admit to this, is that nobody, as much data as the Fed has, as smart as the people are there, and that goes for all the governors, that goes for as smart as the markets are, and when it comes to things like inflation, job growth, these things are not always easy to predict. And so, what are the dangers here that Bernanke gets, the direction of things right, i.e. he's been flooding the system with money, but kind of misses the boat on timing.
Their forecast has been wrong in the same direction for something like 10 out of the last 11 years. They've overestimated how strong the economy is going to be consistently year over year over year. And I think that's one of the reasons why what you see now is a lot of caution about predicting that the economy is going to get back on track. And that's exactly why I think maybe things are better than we realize right now, because everyone is so reluctant to say we're back in this, including the Fed. So maybe the surprise over the next few months is going to be that there's more traction than people realize.
Is Ben Bernanke happy that the yield on the 10-year and the 30-year bonds are still very subdued? I mean, we're still we're maybe just above 2% now, but it's been kind of in the 190 range. The 30, do they care, or do you think they want it to be low?
I think they're probably doing cartwheels right now.
Do you think
No.
I'm curious. I'm curious. Do they get concerned that the market?
There's two reasons why they would embrace a low yield, and one reason why they wouldn't. I'll give you the two reasons why they would. First of all, it tells them that Operation Twist, this program where they're going out and buying long-term bonds, is working. That's exactly what they want. They want to be driving down long-term interest rates, and it looks like it's had some effect. The other reason why they're very happy that long-term yields are so low is it tells them that despite all the criticism that everybody is throwing their way, inflation isn't coming back. That if inflation was a real concern, people would not be following the Fed into the Treasury market. So for those two reasons, I think they're happy.
And he doesn't buy all the shenanigans of Ron Paul with the silver coin at the year. He kind of expects that, right? That doesn't rattle him.
He was,
You think he was
didn't
rattled?
take Ron Paul's bait yesterday, right? Yeah. Ron Paul wanted to draw him in.
He wasn't going.
Because Ron Paul wanted a headline, and Bernanke said, I'll be happy to talk to you about that some other time.
Right. No, exactly.
So, but I didn't give you the negative about low yields, is it also tells us that, this economy is not going gangbusters on the growth front. So it's not all, I was kidding about the cartwheels, it's not all reasons to do cartwheels over at the Fed.
Right. What should we be expecting? They got a meeting coming up. Is there anything to expect, or is this kind of like steady as she goes?
I think they're in a wait and watch mode. They're waiting to see how things play out. And, I think the other piece of this, which is really important, which we haven't talked about, is the stock market. We're flirting with 3,000 on the NASDAQ. That's still way off its all-time highs. But, this is something that could also drive consumer spending.
The wealth effect, the fact that
it could drive consumer spending, it could drive business investment. This is another, potentially surprise on the horizon.
And they got the Europeans basically doing a similar thing, but in a different way through their LTRO.
On a massive scale. Yeah. We're talking about more than €1 trillion they've pumped into the system in just the last few months.
Right.
That's faster money pumping than we've seen out of the Fed in the last few years.
Does it end in tears? Final question, John Hilsenrath.
It always ends in tears.
It always ends in tears. Thank you very much, John.